In this video, I'm going to show you some of my unrealized losses. Yeah, that's right. On many of the stocks I'm trading right now in my selling premium portfolio, I'm down on. Doesn't mean I'm out. In fact, in this video, I'm going to show you one stock that I'm using, picking up crumbs. Hey, look, I know you're going to like this one, so stick around. Hey, welcome back, everyone. It is time for another red-hot covered call video. Well, hey, look, I'm back behind the mic. Been gone for about 2 weeks. We welcome a new granddaughter in the family. Actually traveled back to Ohio to see my moms and family. Absolutely love getting away, taking a breather as this market absolutely takes profits. Look, this is what Wall Street does. For all you that have emailed me asking where I'm at, am I worried? I'm not worried at all. This is exactly what Wall Street does. They use little snapshot bits of news to take profits. We had recently hit all-time highs. Then they start talking about inflation, and next thing you know, we're selling off. We're taking profits in all those fluffy tech stocks. If you watch my last video, you know that, quite frankly, I was down on a couple stocks. And I'm going to show you those stocks today. And I'm going to show you how much money I'm down. Yeah, I have unrealized losses that, quite frankly, would choke a horse. But like I've always told you on this channel, we do not come to this game half cup empty. We know how to play this game, and what we do is we pick up crumbs. And now, if any time is more relevant than right now, is this stock market. A lot of the stocks I got involved with are the fluffy type. I actually thought the fluff came out, but when the Bitcoin mania hit with Coinbase going public, then all the inflation talk, I'll tell you what, Wall Street absolutely destroyed all those fluffy tech stocks, and I got caught in that wave as well. But they're great companies, and I believe they're going to come back. And we can write premium along the way. And I'm going to show you a trade that I'm doing with my favorite Rocket Mortgage. Because if you've been watching my videos, you know I had a 2150 cash secure put. News came out of inflation, and then they had earnings, and next thing you know, Rocket Mortgage trading near 16. So we're going to have to dance with the devil, and we're going to talk about dancing with the devil. But what I want you to understand is this. I have the mindset of half cup full, and I understand the game. Been doing this for 5 years. So the trade never ends until I say it ends. And what I mean by that is simple. I am going to use a stock 5 and 6 and 7 times. Whether I'm up or down, I'm rolling up, rolling down. See, these investments, their job is to sell premium, put cash flow into my bank account. That's what they do. So I'm going to use them whether they're up or down. Now, you have to learn this game and understand exit strategies and be willing to hold these stocks when they fall. But while they fall, we can still sell premium. Yes, it's harder. I mean, it's much easier when you buy a stock, you write an out of the money 30-day covered call, knocking it down, and it goes higher. You have your shares taken away, all is good. But when the stock falls and you don't have any protected puts, well, now you got to dance. You have to dance because your stock purchase price is higher than the covered call strike price you're probably going to write when you write that next covered call. So we're going to talk about that. So with that said, if you like anything you hear today, I want you to subscribe to the channel. It's right there and it's free. I come back every week, try to come back every week when I'm not on vacation. I give you timely and relevant covered call trades. We talk about them, so maybe you learn something. That really is the purpose of this channel. Now, hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. Now, what I'm doing is this. We are in May, and I have already made cash on the table, $78,000 for this year. I'm going to tell you what, this has been a fabulous year for selling premium. Yeah, we're down right now, but look, last year, when the stock market was down some 50%, when the stock market crashed, I started selling premium like nobody's business. We were able to rally from in the hole 50% on the stock market. We were able to break records. I ended up selling $110,000 in premium and stock appreciation. I'll tell you what, it was my greatest year doing this. If you go to my website, cptdashboard.com, you'll see that I show the money that I've made over the past couple years. I show you the money money so it motivates you because maybe some of you out there are sitting on the bench. You'd love to have that cash flow side income in retirement. You can do this. I love showing my numbers largely because a lot of people want to get a gauge as to how much they could actually make doing this. So I have no problems showing you. This year, $78,000. My goal was $60,000, so we've already eclipsed that. Now, with that said, you're about to see that I have almost as much unrealized losses right now. But like I said, don't get excited, okay? The trades are not over. I use stocks month over month over month. I don't let my shares be taken away. I use exit strategies. I have a plan, and I execute the plan. So as you can see, May, I've already made $10,000. Now we have a little bit of time left in May. I think I have 2 coming off the board in May. So that number's going to grow. Over the next 3 months, it's going to be taxing. I'm going to have to really use my skill here to try to generate my monthly goal of $2,500. Yeah, I know I have a very modest $2,500 goal, largely because this is an experiment in retirement. Can I generate about $2,500 in retirement using the selling premium strategy? And so far this year, as you can see, $11,000, $24,000, $17,000, $15,000, and I think May is going to be $13,000. This is unbelievable. This is the pseudo passive income you could generate using covered calls, using cash secure puts, using your investments, using your cash. Anyone can do this once you learn it. Get your financial education, bang the YouTube videos. I'm telling you, this is not rocket science. I'll tell you, most of it is emotional, right? A lot of people buy a stock, they read a covered call, the stock falls, and to be honest with you, they email me asking, what do I do? Well, that's the ebbs and flows of the stock market. That's part of it. You have to have the attitude, half cup full, this is what we do. And I really hope over the years I've been able to motivate and inspire you and get you a little more comfortable with it. That's why I show you my trades. I show you trades that are up or down. I want you to get a feel for how an active, successful trader does this. And to be honest, to sit back and say, man, this cat's down some $5,000, yet he sees his covered call premium as a profit. How can he think that? Well, it's because the trade never ends, right? They didn't take my shares. We have another 30 days of opportunity of selling premium. Again, we have to have our exit strategy so we don't have our shares taken away below our stock purchase price. We do this all the time. It's not a big deal. So as you can see, cash on cash, I'm up 35% for the year. I'll tell you what, this is the one thing that blows people's minds because most people really try to make that 8%, right? Those wealth managers will absolutely celebrate to their clients that they made 8%. Why 8%? That is the historic average of the S&P 500, and wealth managers try to mimic that. If you can beat the S&P 500, then it's worth paying a wealth manager. We're able to sell premium. We're able to generate higher returns. I mean, hey, look, whether it's me or somebody else, most of the time, if you're good, you can beat the S&P 500. In fact, last year I was up 49%, and I think the year before I was up 25%. This is not rocket science. You can do this. So let's jump right into this. I am going to show you my unrealized losses. Unrealized losses basically means I'm owning stock that, quite frankly, my stock purchase price is much higher. So one of the things we do over at my membership, and by now you probably know I have a membership, an upgraded CPT dashboard membership where I love to communicate with my members, showing them the world through John's eyes. So what I love to do is just come back to my roots. Love to come back to my roots as to how I feel about my trading. I tell people all the time the story when I got so deep in the oil stocks in 2015 and the markets fell. I really needed to keep my emotions in check. That was the key. It wasn't about the money. I forgot about the money a couple days after, but those emotions of being down, those emotions of getting kicked, absolutely seeing my account just burn money as the stocks fell. But here's the deal. We come out of that with a different attitude, a different mindset. We've been there, we've done that. So what I love to do is share with the members my mindset. And I've been consistent with this, and Wall Street has absolutely played the part. Wall Street loves to run them up, sell them off, run them up. They take profits in pennies. So it's very important to understand that this is the kind of thing that happens. When DraftKings runs to 67, 68, and they peel it back to now being 45, this is what Wall Street does, okay? Pins rockets to above 80, it's now trading in the 50s. It's what it does. So we have to work within that framework. And yeah, I'd love to be up 30 points, but we're not. So again, what am I going to do? Am I going to go into the fetal position and not look at my account? No, we are going to do what we do, and we sell premium. You have to have that confidence, right? And the only way you get that confidence is actually experiencing. So over the past 5 years, I've experienced pretty much every situation. Hell, I tell the story of Alibaba all the time, where I was involved with Alibaba at 200 and the thing fell to 140. I had to battle my way back. I did a video. It was the most unpleasing 5% I've ever made in my life, but I battled back. Alibaba's down 60 points, and we end up making a mere 5%. And I think that was in about 1 year. And I'll tell you what, Alibaba didn't get back to 200. So this is a game. We learn the game, and we profit from the game. Now let me show you my unrealized losses here. So this is the email I sent to my members. I try to be transparent. I take the approach like, look, it doesn't bother me what I show you folks. I mean, this is what I do, okay? So whether I show you winners or losers, really what I want you to take away from this is that I am in the hole about as much as what I've made. But you have to understand the attitude. The attitude here is not that I have found myself in a really bad spot. My attitude is, this is how it works. I just have to learn how to work the system, work my stocks, keep selling premium, do what I do, and this too will pass. Now, if you don't have that attitude, you would be destroyed when you see these numbers. So let's take a look. So this is one of my weekly Kickstart emails I send to the members. And usually it's positive, right? We're talking about the markets. I'm giving my opinion, seeing the world through John's eyes. Well, on this email, I wanted to talk about my unrealized losses. As you can see here, if you've been watching my channel, you know that I've been involved in Pins, Mara, Penn, DraftKings, Rocket, Zillow, Redfin, Workhorse, and I have a little position in GoodRx. So all of these stocks were purchased higher. We sold premium on those stocks. My cost basis is not where I bought the stock. I hate using my premium for cost basis reduction, but in this case, we might have to. Well, in the case of Zillow, I'm going to highlight Zillow here. If you remember, I did a 172.50 cash secure put a couple months ago. Well, I ended up buying some shares and I did another cash secure put. So my cost basis on Zillow, using my premium as cost basis. Again, I hate doing that because it's an experiment in retirement. I'm in retirement. I'm using the money for my retirement living, right? Well, Zillow has a cost basis of 148 right now. So the stock's trading at about 113, 114. So it isn't as bad as it looks. By the way, all of those numbers are based on my stock purchase price, not cost basis reduction. So as you can see right now, I'm down seriously on Workhorse because I have 1,000 shares. I'm in at 1977 and Workhorse is trading above $8. DraftKings is another one. This is one where people's eyes just pop out of their head. Like, how are you down that much? Well, remember, that was my weekly $1,000 stock. And you notice I haven't done too many of those videos. Well, I am down, but do remember, I made over $20,000 trading this same stock. So again, it's mindset. I am down, but I'm not out. So it's very important to have that mindset. Look, if you're watching YouTube videos where the YouTube creator talks about mindset being bullshit, that person doesn't trade. That person is not qualified to even talk about the subject. Because I'll tell you this, it's absolutely mindset, experience, execution. Because if you don't have the mindset, you're not gonna make it through situations like I'm in right now. This is what makes a great trader. Having the mindset and attitude of half cup full that we are going to work our way out. All those stocks there, with the exception of one or two, are pretty darn good. Yeah, I got myself into a couple that, to be honest with you, I should be ashamed of. But we're in and we're going to work them. Now, look, if you want to be a part of my membership, I'll tell you what, it is absolutely on fire. I haven't done a video in 2 weeks, and it seems like every day I get a new member. So for those that have recently joined, I want to welcome you aboard. Hey, look, if you go to my website, cpt-dashboard.com, I have a 1 free month offer there. In fact, if you use that offer, it's considerably less than the monthly subscription. That's the one everybody loves because you get 3 good months with the membership and you get to see all of this, okay? While everybody else is scrambling on YouTube watching videos where it's gloom and doom, my members are getting emails that keep us flatline. And oh, by the way, I get a lot of emails from my members asking me very specific questions, because part of the membership is you have access to me. I have seen it all. Now, whether you agree that I'm a great trader or not does not matter. Wouldn't that be cool to have a second set of eyes looking at your trade? A trade that you might be down on? Maybe get ideas. So if any of that interests you, head over to my website, cptdashboard.com, click Upgraded Dashboard. Would love to welcome you aboard. Now, here is the rocket mortgage trade that I have done recently. Now, the setup is simple. Remember, over the past 4 months, I've been doing cash secure puts, generating some $2,000 per month, doing a very simple cash secure put. I put up the money, I give somebody the right, but not the obligation to assign me their shares at a price I pick for a time frame I pick, and I've been picking the 30-day cash secure put expiration, and they pay me a per share premium. Now, over the past 4 months, I have not been assigned the shares, and in fact, during my last cash secure put, I was going to buy it back and alleviate the obligation, pocket $1,000. Remember, I was using 2,000 shares. So to be honest with you, that was a $2,000 crumb because I was picking up over $1 per share in premium. Now, with that said, earnings happen and the stock tanks. And it falls below my strike price of $21.50, or that price that I told the greater stock market I would buy your shares. Well, of course, they stuck me with the shares, and now I'm going to be writing covered calls on these shares, right? I now own the shares. I now need to put them to work so I can make that monthly income for this month. And stock kept falling. And in fact, with the inflation talk, the Bitcoin mania, earnings were not as good as last earnings. The stock fell, and here I am left holding the bag. So what am I going to do? So with the rest of my stocks that are down, I need to pick my spots, right? This isn't about me doing a trade for trading's sake. I need to make sure I pick my spots. I do not want my shares taken away from me lower than my stock purchase price or where I acquired the share. So I need to pick my spots. So what I'm going to do, I'm going to write 30-day covered calls using the 30 delta. Now I'm going to show you on the chart what I'm talking about here, but the idea is this. Remember, delta can be a probability of a stock getting to the strike price in that time frame, that 30 days. So picking the 30 delta gives me a 70% chance it will not get to my strike price. So with that said, we're going to use that 30 delta, and that's what I did with this trade. Now, looking at this trade I sent to the members, by the way, I send all my real-time trades to the members. What I did here was simple. We're looking to pick up crumbs. We have to let this trade percolate a little. We have to let it base, right? We have to let Rocket Mortgage base. Let all the sellers leave the stock, and now it's going to drift sideways to higher. Well, along the way, we're going to write these 30 to 35-day covered calls using the strike price, which is 30 delta or below. We want the least amount of probability as possible, yet collecting a little crumb. Now, because I have 2,000 shares, if I get 35 cents for this 30-day covered call, well, I can write a covered call on 1,000 shares, pick up $350. I can wait for the stock to base a little bit. Maybe it goes a little higher. We write another covered call on the other 1,000 shares. And that's what I did. So I basically did 2 covered calls on my one set of 2,000 shares. First trade was done earlier this week. This is the second trade. I went ahead and decided to do the June 25th expiration. We went ahead and picked the 1950 strike. That's $2 below my stock purchase price. So we talked earlier about dancing with the devil. What does that mean? Dancing with the devil means this. I'm going to have to write covered calls where my strike prices are below my stock purchase price. But see, we dance. We do not let someone take our shares. So as the stock approaches the strike, the 1950, I need to have my spidey senses up. I need to make decisions. Do I buy back the obligation, right? Do I buy back my covered call and then roll up to the next strike. I have to keep the spinning plates spinning. This is where the dancing part comes. I'm going to go ahead. I'm going to write this 30-day covered call. The stock is trading at about $16.50 to $17 at this point. So there's a little bit of cushion here. There's $2.50. Now, when we go to the chart, I'm going to show you why I feel so confident picking that $19.50 strike, because I don't think it gets there in 30 days. Now, here we are in the chart. Now, the reason I picked the 30 delta is 100% because that gives me enough of a little bit of a crumb in premium. I think I got 36 cents a share. Now I have 1,000 shares, so that's $360. Again, I'm trying to make that $2,500 for the month using multiple stocks. So I need to keep collecting crumbs. You know, this isn't a situation where I can turn my head, not look, wait for the markets to recover. Hey, in theory, I'm in retirement and the bills do not stop. There's no days off for bills, okay? So we need to keep doing this. So looking at Rocket Mortgage, you could see, for the most part, it trades in that bankable range that I always talk about. Doesn't go too high, doesn't go too low. It's a great Goldilocks stock. So with its recent rally after last earnings, then it simmered down. Then we have earnings again, the thing falls off, and look what it's doing now. Look, I have no crystal ball, but I'll tell you what, that's basing, and I have a suspicion it's going to trade right there. So now I'm going to play that range. What is that range? Well, the stock's now trading at about $17. I think it'll trade between $16.50 on the low side and maybe $18.50 on the top side. We need this market to flush out all the fluff and then start to base and move higher. Look, the reality is we still have an economy opening trade, right? There's more vaccines. There's more positive talk. There's a lot of states that are opening up where they're not going to wear masks anymore. And I will tell you this, with my recent travels to Pittsburgh and San Francisco and Monterey and Ohio, Cleveland, and just walking through the airports like Phoenix and Denver, people are getting out. Okay, so people are going to get out. There's tons of money on the sideline, and that money's going to be spent. Now, there can be talk about inflation, and there can be talk about Bitcoin, and all of these little topics that might actually cause the stock market to stall out. But the reality is, if you're asking me, this thing starts to base, we go higher. So again, I have to make sure I'm in the game, I'm watching, I'm looking for opportunities. And in this case with Rocket Mortgage, that's exactly what I'm doing. I'm going to write that 30 delta, 30-day covered call. If the stock were to pop going higher above my $19.50 strike price, I'm going to have to probably buy that option back, absorb the cost of that buyback, because chances are the option will be trading for more than 36 cents that I got paid. I'm going to absorb that cost, and we're going to then write the next covered call. We will not let our shares be taken away. Once the stock gets above $19.50, I'll have my spidey senses on, and we will make sure we continue this trade. Now, there's no news events with Rocket Mortgage because earnings has passed. There's no dividend to worry about. So really at this point, it's a market trade. As with everything, Redfin, Zillow, Penn, DraftKings, these are now all moving based on the market. And once the fluff is out, right, this thing is going to start moving higher, if you're asking me. So look, if you're down, you really need to start looking at that 30 delta. You need to, because you want to have a 70% chance the stock does not get above the strike price before the 30-day expiration. We want to be able to pick up little crumbs as the stock moves higher, right? It's the art of the crumb. And I'll tell you what, for me, I really have to get back to the basics, because over the past 2 years, I have been knocking down some $1,000 premiums. I have to get back to where $300, $400 premiums get me excited. And in fact, this does get me excited. I understand where I'm at. This is really going to up my game. I'm going to see a lot of situations in the next 3 months, and I'm going to have to be prepared. So I'll be sharpening my skills as I've done over the past 4 or 5 years. And I'll tell you, all of the money I've already booked for this year is helping me deal with that. So look, remember, you get that 1 free month if you go over to my website, ctpdashboard.com, sign up. If any of that interests you, would love to welcome you aboard. And hey, look, if you like this video today, bang that like button. It lets me know you like what I'm doing. And what we're doing Next video, we're going to break down the pen trade. A lot of people ask me about pen, and we're going to talk about what I'm doing with pen, because that one brings some serious premiums. And I know a lot of you out there are invested in pen. We're going to talk about it. I want you to come back. So subscribe to the channel so you know when I do my next red hot covered call video. Hey, look, be safe, be healthy. Most important, be lucky. Until next time, may all your covered calls be profitable.